The UK's Nvidia is, of course, Rolls-Royce, which has been performing very well, and their stock is still barging higher. It's one of the main reasons the FTSE 100 is up this week and handily up. I was reading about a thing called, I tried to Google this and I haven't managed to Google it, but I saw a reference this week. I couldn't find anything on Google, sorry, but a reference this week to the FTSE 10, which is the 10 biggest stocks in the FTSE 100, as if that's a meaningful thing. Rolls-Royce is not in there, but the way it's going, it's not far off, because the thing at 10 is Glaxo, and Glaxo is largely treading water, and Rolls-Royce is thundering back after. I mean, we are now well and truly out of post-COVID tailwind stuff at this point, and it is posting some pretty solid numbers here. So, report for the year, revenues up 17% to 17.85 billion, operating income up 54% to 25 billion. They announced, of course, earlier in 2024 that the dividend was coming back, and it is coming back in style. It's coming back at 6p per share, which is amazing and absolutely incredible, and the stock has a current share price of 753 p. But 6p div, 1 billion buyback coming back as well, and there's a 64 billion market cap, so a little bit of that kind of coming off along the way. Importantly, I've also issued some new guidance. So when we first started covering this, it was almost about a year and 2 months ago now, where I mentioned this thing is basically doubled in a year, and I'm looking at its free cash flow projections, and I think it's still got quite a way to go. It's rare that we think a thing that's doubled still is good value, but if they hit these numbers, and this could keep going, and I was right, but as Warren Buffett says, something like, predicting rain doesn't count, building the ark does. And I didn't buy it. I just said, yeah, it could go higher, but talk is very cheap, so no points to me. Looking now at their kind of projections to 2028, they look sort of interesting here. They're looking for 3.6 to 3.9 billion in operating income and 4.2 billion to 4.5 billion in free cash flow. With the market cap where it is, and bearing in mind the market cap is now about 20% higher than it was 5 minutes ago, and certainly when they were projecting this stuff, that would get you around a 6.5% free cash flow yield in 2028. To my mind, that's not that outstanding. If it was right now, if it was 20% ago, I might have thought slightly differently on this, and you were looking at a sort of 7 to 8% return. But there's plenty they still think they can do here. They're looking at sort of three main growth driving things as far as I can tell. One is a shift to sustainable aviation fuel. Their engines are 100% compatible with these. Other engines are not. The downside to that is sustainable aviation fuel is expensive, and you need to find people that are willing to make that shift. So when that happens is a little unclear. Change to narrow-body aircraft, their UltraFan technology, which I don't fully understand, but I understand it to be an efficiency improvement thing. They're looking to partner or considering partnering with somebody for getting their engines onto narrow-body things rather than the big wide-body ones that they currently have a large market share in. And of course, small modular reactors. These things need kind of approval. There are various phases to approval, but they are, or at least when I wrote my notes on this, which was actually from a previous article from a while ago, they were the only firm in phase 2 of their small modular reactor approval. So we can see where that kind of takes them, but they are continuing to grow quite well. To be honest, Steve, it was hard to see exactly where the kind of post-pandemic tailwind thing stopped, but I think certainly at this point we have to start putting it down to companies actually growing quite well here, not just bouncing back.
Yeah, it's been a stunning transformation, Steve, and I think we're probably still in the middle of it if you look at the longer term guidance that they've issued. One of the things, just to tack on to what you said earlier, was about the new fuel. The government talked about that in one of their budgets and said that they were looking to do like a revenue surety kind of scheme for that. They were looking into that, whether they could maybe move people onto these fuels earlier, even if they're more expensive, and the government would, for a short period of time, make up the difference in the fuel cost for them. Obviously, as a way to get investment into those fuels sped up. So maybe that's something we're looking at. I know that the same sort of thing is happening with these SMR reactors as well that the government is looking for a way to try and speed up. They're looking to that, Steve. But the long and short of it is the numbers, really. And you're looking at the free cash flow of what 2.4 billion in free cash flow, and they reckon the mid-term target should be for them to essentially be able to double that to 4.5 billion. And they're not. They say they're not milestones. They say they're a destination. And looking through that list of products that they've got there, Steve, it's a pretty impressive list of products with that could have a strong future ahead of it. So I think it's one of those fair play to whoever has its stocks. It's one of those things that I don't think has ever fit my portfolio. But I think if we knew what we knew today, Steve, going back to those COVID times would have just made it so obvious. But obviously at the time there was nothing obvious about this acquisition. You had to hold your nose and hope for the best, really. And our opinion back then was this company obviously could recover depending on how long this lasts, but it's done some serious damage to itself that would last a long time. And we were wrong about that, Steve. It did do some serious damage to itself, but it's not lasted a very long time at all. And year to date up about 28%. In a market, the FTSE, which is has been considered stagnant for many years, looks like it could be another year of outperformance for Rolls-Royce. And I mean, a lot of credit needs to go to Tufan, and I wonder just how long it's going to be before people start sniffing around this guy and thinking, well, if he did this at Rolls-Royce, where else could he do it? Which of our other industries? I mean, Unilever goes through a new CEO every 5 minutes. Could he do a job there, Steve?
Well, you know where he came from, right?
No.
BP, who is currently under
really?
activist pressure at the moment because of their their capacity to just waste money all over the place on renewables projects that don't generate any returns right now. And the more I think back on this to the COVID stuff, the more I think, could I have known this? I mean, a lot of people were making arguments about Rolls-Royce, but mostly bad ones, because they were sort of just it's down, it will go up kind of thing. But their share count was exploding, their balance sheet was getting wrecked, everything was going wrong all over the place. And I think a lot of the thing that I didn't manage to foresee was Tufan. And the reason I hesitate slightly on that is there was someone who actually made a decent case to me to say there is know-how and good quality stuff in here. When this thing turns around, they've not got nothing here. They've got some meaningful IP. There's good technical knowledge. Other companies don't have this. There's limited suppliers, so on. If you really want to go poking around and beating down aerospace industrials, Steve, you don't have to look terribly far. But I don't love the look of Boeing, and maybe I'm Rolls-Roycing my way into missing out on another one here. But I feel like Boeing has more Carnival written on it than Rolls-Royce, to be honest, and Carnival has not gone as well as Rolls-Royce has.
Yeah, there was opportunities to get this sector very wrong as well as very right, and I think maybe there's a little bit of survivorship bias going on from us here, Steve, when we cover this one and congratulate. But just on your point about Tufan at BP, while he was talking there, I said a quick Google as well. He was there for about, it looks like nearly just over 5 years, and in that period of time, he delivered about 5 billion extra underlying earnings growth in his in the sector that he was working in, which was BP's downstream chief executive. So it looks like he's been quite successful kind of everywhere he's been, especially at putting the profitability pedal down. So yeah, an obviously talented leader, and I would assume Rolls-Royce and its shareholders are very happy to have him, Steve.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.